Good afternoon. This is Dustin with Highway One Capital on June 3rd, 2026, right about 2:30. The equity markets were down quite a bit today with the Dow off 620 points, the S&P down 56, and the NASDAQ down 239 points. Possibly the rising treasury yields and higher oil prices might start getting the market's attention, although we are right near all-time highs. So the market's been very strong. So it's a pretty similar story that we've been seeing here really since since the start of the conflict. On one hand, you have earnings that continue to be very strong, with really a staggering amount of money that's being pumped into AI and technology. We're starting to see some of the stimulus from the big beautiful bill as well. Um, so that's on one hand. On the other hand, you have the Iran conflict is, it really doesn't appear to be ending anytime soon, and I know that's got a lot of people really concerned. So the bullish camp is saying that the economy is really strong. Fundamentals are good. The conflict is going to end at some point, which is going to bring rates down, inflation down, or at least stay the same. The fear of things getting out of control will be alleviated, um, and then the market's going to really go back to focusing on fundamentals, and the economy and the stock market's going to continue to move higher. So that's the bullish camp. The bearish camp is a strong one as well. I mean, they point to valuations being historically really high, and we can see that they are stretched, and that this conflict in Iran is going to go on for a very long time, which is potentially is going to put a lot of pressure on the whole system. I mean, the global economy. Once strategic reserves really get drawn down and depleted, it's going to cause energy prices to spike even higher, and become a real problem, and ultimately slow down the economy, not only here domestically but also around the world. So with the potential of that leading to economic weakness, and potentially an environment of stagflation, which is very difficult to navigate through. So Tim and I, as we've been updating you weekly, we continue to give the higher probability of the outcome being more on the bullish case, which, but at the same time, we're well aware of where the cracks can come from and how quickly that could happen. So we are in the more bullish camp. I think Tim, as he says, is probably further on the bullish side than I am, but we both feel pretty strongly that risk assets are still going to be rewarded. One interesting point that we're focusing on is really how much bad news is already priced in, to the fixed income market, and you see treasury yields have risen sharply. The yield curve is experienced what we call a bear flattening since the start of the Iran conflict. The bear part being that rates have gone up enough to be negative for any high quality or interest rate sensitive bonds, and the flattening means that short-term rates have gone up more and faster than long-term rates. And we talk quite a bit about the yield curve because it's very important to the global economy and the health of the economy and the ability to grow going forward. The yield curve has made significant strides in normalizing until the Iran conflict, and now we're getting back to more of a flatter curve, which is not a great thing. But that's already priced into the fixed income market. The third thing that's really, I think, to take note, and with how much of the news has been priced in, we've seen such a rapid shift in expectations for Fed policy, The markets are now pricing in roughly a 75% probability of a rate hike sometime this year, and has priced in fully a 25 basis point increase by March of 27. And that's significant. This is a dramatic reversal from even just a few months ago, where the market was forecasting multiple rate cuts down to the 2.5% range. And now the implied neutral Fed funds rate is 4%. And even Waller, who's considered very dovish with the Fed, is now talking more hawkish. So, but the good news is that that's been priced in already. And even if the Fed does raise and the economy can hang in there, that gives them more room to cut later if necessary. So just wanted to stay on top of this, keep you informed on our thoughts. All in all, it's been a tremendous year so far, and we continue to be optimistic about the future. So thank you all very much, and we wish you an amazing week, and enjoy each day. All right, bye for now.